Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist. On the last segment, we got into just ever so slightly into the supply and demand strategy or the supply and demand economic law. And we're going to continue to discuss that on this segment here. We talked about unemployment claims on Friday. There was the unemployment rate, and that's kind of what the quote-unquote news people, as Al would say, the talking heads are talking about, is the market is waiting for that. Well, I'll tell you what, the market waits for nobody. And that's what the great things about the financial markets is there's always opportunities in different time frames, different time durations, whether you want to be an income trader or a longer-term wealth trader, which would be like 401ks and IRAs for your retirement, those golden years of your life. And that's what we train and teach here at the Academy is how to take advantage of those, how to have smart investing decisions for those short-term or long-term trades. So that being said, we had investing classes that people were calling into and texting into on the last segment on getting started in these financial markets. If you want to come into these classes and you missed that, we have a state-of-the-art academy right here in Bloomington, right off of 494. You can simply just text the word investing to the number 210, and this is for 2 seats. Most people bring their spouse or significant other. That way, if you do your financial decisions together, start those financial decisions as a family. Text the word investing to the number 210. If you're one of those 90s people and you still like to call, simply just call 952-814-4410. That's 952-814-4410, and we'll get you a date that works the best for you. So, Al, in the last segment, we did talk about supply and demand. We briefly explained it, but I want to get into and talk about that within some stocks, okay? Now, there's been some stocks in the market that have just been nice movers. They've been moving phenomenally, and there's been opportunities long and short, which means profiting as up markets go and then profiting as down markets go. One of the first ones I want to talk about is Target. We've been talking about Target on the podcast for several weeks here, a few months here, and there's been opportunities with this because Target's really been taking a hit. If you look at a chart for our live YouTube viewers, you have Target down roughly from the highs about, I think it's about 60 or so percent, which is a pretty big, that's like cutting a mullet off of a, someone from the South, right? That's a big haircut.
Don't try that.
Don't try that. Yes, it's down about 60%. Now that being said, it was down 40%. People are saying, "Oh, it's time to buy Target." It was down 50%. People say, "Oh, it's time to buy Target," just because it's down. Now you don't just go and buy a stock just because it's low from the highs. What you want to look for and identify is, in this case, if price is down, you want to try to find a demand zone, which, as you were alluding to earlier, an area of buyers where institutional order flow was potentially coming into the market. And we know that institutions move the market. It takes billions of dollars to move the market. Not our measly, $100,000 accounts, $1 million accounts, even $5 million accounts are probably not going to really move Target. It's a big stock. So that being said, Target potentially got into a demand zone. Now, might it be an opportunity to buy Target? Now, one thing I want to just unpack here a little bit is people say, well, isn't that risky? Because people think trading is actually risky. Now, I want you to talk about when you have the supply and demand method and you're able to minimize your risk. Explain how that works, and you can just look at the price chart here. I have mapped out a demand zone for our YouTube viewers. Demand zone here that was developed potentially right around the April of 2020 area. Now, how would somebody put proper risk management and minimize that risk with that supply and demand method?
Well, you kind of hit on it before when you said that, when Target was down maybe 30-40%, people thought, hey, this is a great time to buy. I'm going to get in, and it kept going down. And the problem there is it wasn't the right time. And what the supply and the demand zones that we help our students identify will do is help you identify the right time. You can have the best stock in the world but the price can be so high that it's not a good investment at this particular time. You could have a company like Target. Target's not going out of business. It's a great company. It took a hit because of a number of things that they did, a number of mistakes that they made. But at some point in time, the value is going to be there. That's what let the institutions do the work, by the way. They're the ones that know how to determine true value for something. That's when they will start to make their move. That's the right time for you as an investor or trader to make your move, so to speak. That's when you want to be taking a position. As far as the risk is concerned, the right time, the most important thing as a trader investor is to identify the right price, which is at the right time, to make an investment, to get into something and to get out of something. If you identify that price, that accurate price that is going to be at a point at which it's going to move in hopefully the direction that you want it to go to benefit, that's going to happen because institutions will make big moves. Or it could be an individual. It could be Warren Buffett, for example. Yeah, sometimes he'll put billions of dollars into one position. And if you can identify that right price, you can then have a quality risk management strategy put into place. Now, when we look at these, we call them zones, a supply zone and a demand zone. That's an area, it's a band we identify on a price chart with the entry price and also the exit price if you're wrong. And if you're wrong, and by the way, there is nobody out there as a trader or investor who will not be wrong at some point in time, no matter how good your strategy is. So it's important. And the number one thing, and every professional trader will tell you this, the number one thing you have to be able to do if you want to live to see another day as a trader or investor is to control risk. It's risk management. That's what keeps a lot of people out of the market because they don't know how to do that. It is, in fact, the number one thing that we teach our students. But that's why that identifying the right price is so important, because that will determine the quality of your risk management strategy or position. And also the zones will determine how much profit potential there's for you. And there's three components to a trade. There's your entry, the right entry, there's an exit if you're wrong, and there's an exit if you're right. All three of those should be preset before you're actually in the trade. Identify those 3 points based on what we're going to call a quality trade. That's the price at which you have the lowest risk entry with the highest probability of it moving in your favor with the highest profit potential.
Yeah, I like that. It's that odds and probabilities and putting those in your favor. And that's where you have that actual low risk, high reward, highest probability is at that turning point,
right,
which would be either at a demand zone or a supply zone. And that's why we have these investing classes, to be able to show you that. For our YouTube viewers, you're able to see that. For our podcast listeners and radio listeners here live in the Twin Cities, you're going to have to come in to see that. And it takes a little bit of effort, right? If people want to make changes in their life financially or enhance or improve their lifestyle, they're going to have to do something.
Yeah, you can't sit at home waiting for someone to knock on your door and give you a check for $1 million. You have to take steps. You have to put the effort into, first of all, see if this is the right thing for you, identify what the benefits, the potential benefits are, and then determine whether you think that that's worth your time.
But I must be devil's advocate with you. There was a TV show where people did come and knock on the door.
Right.
What was that called?
It was called The Millionaire.
The Millionaire? So they knocked on the door and they gave them, was it $1 million?
It was $1 million.
And unfortunately these days, that $1 million doesn't go far now. So
no,
they should change that to the $1 billion.
Yeah, they would have to at least have a $10 million
there you go.
show.
So that being said, I want to invite people to an investing class that we do here local at the Academy. These are classes where we've taught thousands just like you how to get in the markets, how to do it safely and confidently. Simply just text the word investing to the number 210 for 2 seats, or call 952-814-4410. That's 952-814-4410. That being said, that was Target. Okay. Now there's another stock I want to look at, and it's Nike. It's kind of a household name. Everybody has the old Nikes, the J's, the Jordans, whatever you want to call it, the Air Force Ones, the Air Maxes, not the iPhone, but the Air Maxes. So Nike it's been in a downtrend since about February of this year, and it's down about, let's say 30%. Same story. Is it time to buy Nike or whatever that may be? But that's not what I want to talk about in this one here. They had earnings last week or 2 weeks ago, and it was great earnings. Okay, there was a surprise of 18 cents or 24%, and we talked about this on the podcast yesterday. But does good news, and we alluded to this in the beginning of the show, does good news always mean good things for the stock? So in this case, they did have good earnings. Price gapped up from $89 to $99, but it's been dropping ever since. Mm-hmm. So when that happens, is the public too late to the party? Are they buying after it goes up, and then it just goes straight down like it has been? Or what are ways to not get caught in that trap?
Well, the only way that you can not get caught in that trap is to control your emotions, because that's exactly what it is. It's emotional buying, emotional selling. We often talk about FOMO, the fear of missing out, and also what we call the herding effect. And that's where the public, and as human beings, we typically don't like to be the first person to do something. We want to make sure that what we do is the right thing to do, so we wait until a whole bunch of other people have done it. Well, by that time, it may be too late, and that's what happens in these cases. People see something move up, and something goes from $80 to $90, and you weren't in. You're thinking, oh, I better get in now at $90 before it goes up to $100.
That's the whole cryptocurrency craze that everybody was doing.
Crypto craze is probably going to happen with artificial intelligence. It happened with the .com bubble back in the 2000s. But that's the problem. People are not able to identify when something is going to move, so they can participate in as much as possible the full movement of it. So that fear of missing out, it causes people to do exactly the opposite of what everybody out there listening knows they should do, and that's buy low and sell high. Because of our emotions, we do the opposite, and we know that because we see every time there is a peak in the market, we see the equity ownership of the public increase. When there's a trough during a crash or correction or bear market, right at the bottom, we see the equity ownership of the public decrease, which means they're selling low and they're buying high.
And that's why we talk about supply and demand, because that's how to remove those emotions. And you're not basing those emotions off your decisions off emotions anymore.
No, you're basing your decisions off of fact. Yep. And then we take it a step further and show people how to simplify the process by following a set of rules. And as those rules are set by people that worked on Wall Street, that were using the amount of money they had to actually move markets. They were going to be hedge fund manager or floor traders. They know order flow. They know how that impacts price. That's how we were able to put together these rules, these steps that you follow for every trade that you do. That takes the emotion out of it, the thinking out of it, the fear out of it. Those are the things that will get you in trouble as a trader investor. You have to know how to control those, or that emotional component is probably going to be your biggest enemy.
Yeah, and just to give an example of who we're talking about, big money, that's your Goldman Sachs, the big banks, the institutions. It doesn't matter who it is. It's a collective amount of money in the market.
Sure.
And they move roughly about 90% of the market. It's not the public. So that's why we have an advantage, actually, because we can see on a price chart where they could be buying, where they could be selling, and we can wrap proper capital management around it, make our decisions. We can do that and get in and out of the market without anybody knowing. That's a great thing about being as a retail investor. That's the public.
Exactly.
Is being able to do that without being noticed. We're like a needle in a haystack.
Yeah. Or if they're controlling 80 or 90% of the activity in the market, they need to have somebody on the opposite side of their trade. So maybe they're doing things to get the public to make a move that is in the Wall Street's best interest, not the public's best interest.
I'm glad you mentioned that, because that's what I was referencing back in the first segment about when you see this stuff on whatever Market Watch or whatever different news sites that are out there. So that being said, if you want to get out of that cycle, that what do you call it, the hamster wheel and just going around and around and around, it's time to do things differently, and that's why we have these investing classes that I want to invite people to right here at the Academy. We have a state-of-the-art facility right here in Bloomington, right off 494, real easy to get to. These classes are 2 hours during the week and on the weekend, even in the evenings for you 9-to-5ers. Text the word investing to the number 210-210 for 2 seats for this class and a jumbo pack that'll help you get started right away. Text investing or call 952-814-4410. That's 952-814-4410 if you're one of those 90s callers. This is Josh and Al, Investing and Trading Live. We will be right back.